A brand new trading week is ready to kick off right behind me here at the New York Stock Exchange. It's also the first full trading week for October 2021, and well, last week and last month was tumultuous for the U.S. markets. And if you're wondering, James, just how tumultuous was it? Well, the combination of inflation fears, rising treasury rates, and slowing growth paved the way for a September not to remember, as the S&P 500 finished the month down 4.8%, breaking a 7-month winning streak. The Dow and Nasdaq dropping 4.3% and 5.3% respectively, suffering their worst months of the year. In total, 10 of the 11 S&P 500 sectors suffered losses in September, led to the downside by a 7.4% monthly drop in material stocks. However, not all has been bad. The S&P 500 still up more than 15% on the year. And speaking of that, it's time to look ahead. We have a new month, a new week, and there's a lot to look forward to, so let's check it out. It's time to take a look at what will likely move the markets in the week ahead. Now we begin the week on Monday, and it's off to a bit of a slow start. China is closed for the National Day holiday, while we will also have an OPEC meeting in Vienna. Meanwhile, in the United States, we have 3- and 6-month bill auctions, while August factory orders await. Expectations for factory orders, a read of 0.9%. Now Tuesday kicks off down under in Australia with the RBA's interest rate decision, that of which is expected to remain at 0.1%. At the same time, market services PMI reads due out of Spain, Italy, France, Germany, the UK, and the United States. And speaking of the United States, we also will have the release of ISM Services PMI for the month of September. Expectations call for a read of 59.8. Now Wednesday kicks off in New Zealand with the RBNZ interest rate decision. Expectations call for a read of 0.5%, while right here in the United States, ADP private payrolls await. Expectations for private payrolls, 475,000. Thursday sees us in Switzerland with the Swiss unemployment rate. Expectations call for a rate read of 2.8%. Keeping in Europe, German August industrial production figures await. Expectations call for a slide of 0.5%, while in the United States, we have weekly jobless claims figures, both initial and continuing. And speaking of jobs, Friday, all about the September U.S. employment report. September non-farm payrolls await, with expectations calling for a read of 500,000. In addition, the September U.S. unemployment rate expected to improve to 5.1%. Now, keep in mind, there's also a lot of back and forth going on in Washington, D.C. concerning the debt ceiling, government spending, and the infrastructure bill, whose numbers continue to change throughout all of last week and will likely continue to change and affect the markets as well. Keep those headlines in focus. And until next week, live from the New York Stock Exchange, wishing you all a great week ahead. I'm James Sweeney reporting for ICM.